This leads me then, Jenny, are the best opportunities this year going to be outside the U.S. or in?
I think they might be outside, and I love that we're finally talking about this. We manage an international dividend income portfolio, and for the last almost 2 years, when I've had clients come in with fresh new money, I've been giving them what I would consider by historical standards to be disproportionately high international allocations. Just this morning, I was reviewing the JP Morgan Guide to the Markets, and there's a stunning chart in the back of it that shows the S&P versus the MSCI ACWI index, and you see that since the low in 2009, S&P is up like 370%, I think. MSCI ACWI is up like 124%, and it's trading at a 4-point discount to the S&P 500. So like S&P 500 is at 18 times, MSCI ACWI is at 14.5 times, and there are some really great companies in there. Like why, should Ford and GM trade at premiums to Toyota and Honda just because they're in the US? I don't think so. You can go down the list and do that over and over. So I think there's a really big opportunity. I'm thrilled that we're talking about it.
Yeah, but Doc, at the same point, it's not like people are dialing back their expectations for the S&P this year. Nope. You have Oppenheimer's technical analysis today, the road to 3,600, Piper Jaffray 36, BTIG 3440. You've got some 3,500, 3425, 3400s across the board. So there is still optimism that the trend here is going to remain your friend.
And I agree with that, Judge. I'm not saying that the EEM or any derivatives country-specific of that aren't going to outperform potentially. But I still like, A, the liquidity here. B, I think the recovery that's happening in Europe is real. Mm-hmm. And I think a lot of the stimulus that has been applied, again, for years, I don't want to say coiled spring necessarily, Judge, but when you've got a situation like China, as they've put all that money into it last year to fight off the trade war, Europe instead had cut their rates into negative territory for years. I think a lot of that has really pushed equities to the point where they are ready to make a big move overseas. Is it going to be bigger than our move? It very well could be. I'm still concentrating, though, in the United States, although I did take a lot of profits today in a lot of stocks.
Like
because
what kind
the
of
calendar
stuff?
Turned over. Well, in LVS and in Win, took profits on both of those.
Casino
Why Win?
names.
Yeah, but I took those because of China, because that reserve requirement going down in China, Judge. So just as everybody has said, HUYA, Baba, Billy, YY, which is now known as Joy. All of those stocks are up between 9 and 13% today. So I was taking those off, taking Crane shares, the K-Web. Josh and I had talked about that one, I think, back in September, when that thing was significantly lower, maybe 25% lower than where it is now. So I was taking money off the table in those, and I was lightening up in Apple, in Facebook, in a host of these, in Nike, in Snapchat, even a little bit in Tesla. Didn't mean I'm getting out. I'm not liquidating completely. What I did was I sold all of my calls in virtually all those stocks that I just described, and instead I'm in the stocks and I'm protecting it with with puts.
You think that some of these names have gotten into nosebleed territory? The biggest gainers are the ones that continue to gain, as we lead part of the conversation in the show. As you said,
True.
You took some profits in Apple.
Right, but not the stock. I still own 100% of my Apple shares, and it's just this far from 300 right now.
That's right.
As we're speaking. I still think a lot of these stocks look great, Judge, but one of these days we could see exactly people doing what I did today, and that is I rolled off my taxes and don't have to pay those until, of course, April of 2021, not April of 2020, 2021, because I took the profits now. So those are what I was concentrating on.